Are you feeling overwhelmed by taxes, uncertain about your business finances, or worried about protecting what you already have built? Well, you're not alone, and there's a better way. I'm Ashley Freeman. I'm a tax and asset protection attorney, and this is Tax and Money Mastery, where faith meets financial wisdom. Each week, I'll show you how to legally reduce your taxes, manage your money with clarity, and protect your business and personal assets so that you can focus on what truly matters most: God, family, and career. Proverbs 10:22 says, "The blessing of the Lord makes one rich. He adds no sorrow." So grab your coffee and settle in. This is a podcast you can't afford to miss. Hey everybody, I'm Ashley Freeman, tax and asset protection attorney. Today we're going to talk about quarterly estimated taxes. What are they? Who has to pay them? And what happens if we don't pay them or pay them on time? All right, let's dive in. So who has to pay quarterly taxes? Business owners have to pay quarterly taxes. If you are a sole proprietor, an LLC, if you have an S Corp, if you're like a gig worker or an influencer, all those people who work for themselves have to pay quarterly taxes if they think that they are going to owe more than $1,000, which most people do. If you're really working at something, even if you're working at it part-time, you're probably going to owe $1,000 or more in taxes. Those are the people that need to be aware of it. How it's calculated is your estimated income. I know that's really hard for somebody who's just starting in a new business, but you're going to have to set aside some for each quarter, just kind of based on, I guess you're going to have to look at how you're doing, how the business looks like it's going, how quickly it's growing, things like that. Plus, you also, other than just income tax, you also have to pay self-employment taxes, and those may need to be paid on a different website. You also may have state taxes that you have to pay on a separate website. So for now, I'm just talking about your federal taxes, okay? The state that you live in, you're going to have to do a little research to find out how you're going to pay taxes on there, if it's going to be quarterly or how your state does it. They will have something available to show you, to teach you how. All right, so they have something called safe harbor rules. And safe harbor rules can help us as business owners to kind of determine what we should pay in taxes so that we don't end up owing penalties. We can pay 100% of last year's, what we owed last year, as a safe harbor. And then if you end up owing more than that at the end of the year, you find out your tax bill is higher than that. If you've already paid that 100%, you're okay. You're not going to get penalized. If you're a high income earner, your adjusted gross income is over $150,000, then that's married filing joint. If you're over $75,000 married and filing single, then you need to pay 110% of what you paid last year for a safe harbor. And the safe harbor, it doesn't allow you to not pay them. It just allows you to have no penalties if you still owe at the end of the year and you've already paid that much. All right, so quarterly taxes are due April 15th, June 15th, September 15th, and January 15th of the following year. When you go to pay, if you're late, here's the kicker. I had a couple just recently that they had a new business and they found their business was doing very well. Their business was like around 200,000 at this point in time at the year. And they're like, well, what do? We didn't pay. We paid the first quarter, but then we didn't pay anything else because we weren't sure how much to pay. What happens is if the due date is April 15th and you pay it on April 17th and it's late, there's going to be a penalty attached. Then what happens if you, let's say you skip June and you skip September, even if you don't skip June or September, what happens is the next time you make a payment, that payment money goes towards the penalty portion first. And so if you owed $100 and the penalty was $20, then you pay the $100. Well, 20 of that is going for penalty. So you've actually only paid 80 on the 100 that you owe. So now, even if you pay on time, you're still actually late because you haven't paid the full amount. See how that works? That's kind of how I think they do it on mortgages, that if you're late, the amount that you pay, they take their portion first, and therefore you're still late. And that's how fees keep piling up, and that's why people freak out. I told them pay the 110%, but because they were late and didn't file their June or September, they're not going to be under the safe harbor. They're going to have penalties, period. If you don't make one of your payments on time, you're going to have penalties. So there is no flat rate fee charged if you're late. It's calculated on the interest of the unpaid amounts. It can add up though. A lot of people just choose to pay the late fees because to them, in the scope of their business is so huge, it's really not that much, but it still is late penalties. So why pay the IRS when you don't have to? You've worked so hard for your money. Let's keep as much in your pocket as you possibly can. All right, how to make the quarterly payments. You can pay the IRS direct pay. It's called IRS Direct Pay, and that's when you use your checking or your savings account. That system, you don't use credit cards and you can't use debit cards, okay? That's just your checking or your savings. You can also use, I think, that IRS Direct Pay to pay your payroll taxes on. Your payroll taxes are going to be separate. Those are self-employment taxes. Those you don't want to be late. You don't want to miss. That will send you to jail, okay? So payroll taxes, be very, very careful on those. Make sure that those are always on time. You don't want the IRS breathing down your back for payroll taxes, okay? Payroll taxes, what I mean is self-employment taxes, Social Security, and Medicare. If the government has their hand in them, they want their money now. All right, the second way to pay is the E like Edward, F like Frank, T like Tom, P like Paul, S like Samuel, which is also known as the Electronic Federal Tax Payment System. It's online. You go on there, you make an account. Don't wait until the last minute, like right before one of the quarterlies are due, because sometimes their systems get jammed up, and I've seen it happen. I've had clients that had it happen, that they can't get in and they can't make their payment, and then they end up being late just because they couldn't set up an account because everybody was on there trying to do it at the same time. So don't procrastinate. Get it done early. Then the last one is IRS, the number 2, GO. That's IRS, the number 2, GO, G-O. That's your mobile app that you can pay on. So those are the ways to pay. Don't be late. Be early if possible. S Corp owners, be aware that you may also have to file the payroll taxes and deposit them separately. You still can use the IRS Direct Pay system because you're using your checking or savings, but just be aware of that. That's all I've got today. I hope this was informative. If this helped you or could help someone that you know, please share it. Please leave a comment. Let me know the things that you guys want to see because I really want to know what's most important to you guys. Thank you for listening. Have a great day.